Hi, so today we're going to talk about Bitcoin. Is it a bubble? Or is it not a bubble? Or does it even matter? So let's take a look at the explanation. So in order to understand if Bitcoin is a bubble or not, we first need to understand what a bubble really is. What is a bubble? A bubble is sometimes referred to as a speculative bubble, and it could also be described as a trade in products or assets with inflated values. What kind of impact does a bubble have? Usually it has a negative impact on the economy. And the fact of spending is that market participants with overvalued assets tend to spend more because they feel richer. That's also called the wealth effect. So do you guys remember the subprime crisis in 2008? That was a bubble. And that happened because it was so easy to apply for a loan, for a mortgage, that people started to buy properties. And those properties started to become more and more expensive because so many people were buying them. But when the bubble inevitably bursts, those who hold on to these overvalued assets usually experience a feeling of reduced wealth. And I'm going to explain this later in a bit. What are the possible causes? So why does a bubble burst? And why does it happen? Okay? First, why does it happen? Bubbles occur when prices for a particular item rise far above the item's real value. And experts think the bubbles are related to inflation and therefore believe that the factors which cause inflation could also be the same factors that cause bubble to occur. Not all the time, right? So sometimes it's not the case. Let's take a look at some examples. And this is a very big example, is the dot-com bubble, okay? And it's related to subcrisis bubble as well. How is that related? First, let's take a look at the subprime crisis, okay? So what happened is that the crisis began in the subprime mortgage area, hitting the US and triggering a global financial crisis in 2008. And it happened because the crisis began with the bursting of the US housing bubble and high default rates on subprime mortgages made to higher risk borrowers with lower income or lesser credit history. So what is subprime anyways? The term subprime lending refers to the practice of making loans to borrowers who do not qualify for market interest rates. Okay, so interest rates for those borrowers are usually higher. How did it begin? What happened is that, as I mentioned before, so do you guys remember the stock market .com crash in 2000? So what happened is that year 2000 came, there was the .com bubble, it burst, okay? So a lot of people that were investing into .com stocks, into like fintech, IT, software, hardware, a lot of like the .com like website. So all those IT, the .com like companies, they crashed in 2000. So what happens is that, okay, so people were like, okay, so now I don't trust the stock market anymore, but I still have money. So what to do? So investors, people started to invest their money that before was being invested into .com, into the stock market. They started to invest into the real estate market. So they start purchasing real estate because they believed it to be a more reliable investment than .com. And in fact it was. For some time it was, because at that time the .com crisis, okay, so the stock market crashed. So at that time it made more sense to buy property rather than buying stocks, okay? So a lot of people started buying property. And at the same time, the Federal Reserve cut short-term interest rates to historically low levels. from about 6.5% to just 1%, which allowed more people to purchase homes for a lower cost, okay? So you guys can see where this is going, right? So the subprime borrowing was a major contributor to an increase in home ownership rates and the demand for housing. Why? Because so many people are buying houses, so many people are buying properties, apartments, land. So there was an increase of demand, okay? And when an increase of demand happens, what happens to that asset? The asset becomes more expensive, right? So some homeowners use increased property values from the housing bubble to refinance their homes with lower interest rates and take out second mortgages against the added value to use the funds for consumer spending. And that's what made this bubble grow really quickly. The moment you start to refinance, okay, the moment you started to take second mortgages, is the moment that price starts to rally really like hell. And then what happened? And then the bubble burst, boom, okay? And then what happens is that overbuilding during the boom period, increasing foreclosure rates and willingness of many homeowners to sell their homes at reduced market prices have significantly increased the supply of housing inventory available, driving down prices. So what happens is that now you have so many homes, empty apartments, okay? Nobody's living there. So what happens is that the prices of those homes have to decrease so that people start to buy them again. So people start to rent them again, okay? So people start to look for them again. So there's so much supply, but not enough demand. And when that happens, when you have more supply and less demand, what does it happen? It happens that prices are going down, okay? Prices start to going down. So why it doesn't really matter to most of us or to all traders? As traders, it doesn't really matter to us. Why? Because we want to make profit from the market. And that's all that matters. So as traders, we spot trading opportunities no matter if it's a bubble or not. It doesn't really matter. What we are looking for is to make money. We are in, we are out, and we are in, and we are out, and again, and again, and again. That's all we're looking for. We just look for an opportunity, okay? So we set targets. Okay, we set targets, we enter the trade, and we have exit strategies to protect us in case it goes down, in case it's a bubble and bursts, in case something bad happens, in case something against us happens. So we have exit strategies, and we are in the game, okay? So we are in this game, so we buy and sell, or we sell and buy, okay? So we look for the opportunity, we take the opportunity, we make money, and we exit the trade. Or it hits our stop loss, it hits our exit strategy. We do have an exit strategy. We have either by making use of a stop loss or making use of hedging, okay, you can hedge your position, or making use of any other exit strategy, but we do have an exit strategy to protect us. Let's take a look now at why it really doesn't matter to us by looking at the charts. Alright guys, so now let's take a look at the bubble. Let's see where the bubble was. So first of all, let's change this to SPY. Is the spiders, the Standard & Poor's 500 index, one of the most famous indices out there. So let's look at this. Let's change from the daily chart to the monthly chart. So I changed this to 1 month, the monthly chart. Let's delete a few things and let's draw them again. So, oops, what is this? Okay, so first of all, let's take a look at the spider. So what happened was that we are here. Now we are here in 2008, okay? So what happened in 2008 was, as I explained just before, was the burst of the subprime crisis, okay? So you can see the price of the SPY is going all the way down, and means that we are experiencing a financial crisis, so the bubble has burst, okay? And there are a few elements that you can tell as a trader. First element is double shoulders. So can you guys see here, okay, and here, it's forming these double shoulders. So price has failed to break this level. Can you guys see a resistance level at this? Okay, at this level we have a resistance, and basically price has failed to break this resistance. Okay, so you have a strong resistance at around this price 15514.14, and here I cannot break. And when you have this double shoulder pattern that has failed to break a resistance area, what happens? What happens is that you are expecting prices to go down again, okay? So this is one signal that's telling you. Another signal would be that, can you guys see this channel here? So we have this channel, okay? I'll roughly draw it to you. So you have this channel and you have this thing here. So this is called a channel, okay? So what is a channel? We have, you have waves. So you have the wave going up and down, another push up and down and up and down and up and down and up and down, okay? So we have a sequence of waves, okay? And which are forming this area here that we call a channel. And what you have around here is that your channel was broken. So once your channel is broken here, you expect prices to go down again, okay? And that's what happened here. So after that, prices started to go down again, okay? So now, as a trader, there are two ways to make money. One way is, once you spotted this, you spotted that you have one signal, which was the double shoulders. So here, okay, here was the last high, here failed to break, you have double shoulder. One signal is telling you, oh, is maybe price will go down. Another, the second confirmation, okay, you have one confirmation. Second confirmation is here, okay, is here. So you broke the channel, okay? So you had an uptrend, okay? You had an uptrend was making this channel. The channel was broken here and you have a fall. So here was your second confirmation. Why? Because your channel has been broken at around this area, okay? So we have two confirmations that are telling you price is going down. As a trader, what do? So you wait for a third confirmation that you're going to probably make usage of, in my case, I like PV-SRA, so I use PV-SRA, but in your case, you can use any strategy that you're familiar with, okay? I have another confirmation that the trend is going down, and you can sell somewhere here, okay? You can start your position selling here, and you can close somewhere around here, okay? That's one thing. Another thing is that before, as a trader, okay, as a trader, so before this happens, okay, so it's very difficult to enter here, okay, it's very difficult. Of course you want to enter here, but it's very difficult to predict that a rally is going to start from here, okay? So here you cannot enter, but there are lots of other areas where you can enter. You can enter somewhere here, you can enter somewhere here, you can enter somewhere here, even here, because you failed to break the channel, you can enter somewhere here, okay? So you can enter, go long, so you can buy here, buy here, buy here, okay? You can eventually buy here, some people will buy here, okay? You cannot buy here. Why? Why you cannot buy here? Because here, okay, so before this happened, okay? And this is already telling you, oh, it made double shoulder and it failed to break, okay? So you cannot enter here. right? Because you already got one confirmation that this was going down again, okay? Because it failed to break this one, okay? And you can argue with me. You can say, okay, but why did you say here, here, here you can enter? Why? Because we still have this much space to make double shoulders with the previous high here. So that's another way to see it, okay? And of course, it's not always the case. I can always be wrong, right? No, nothing is for sure. Nothing is 100% sure in trading, okay? You can always be wrong, all right? And this is one way to make money when the bubble bursts. So do you get it? Do you understand the thinking, the mentality, the mindset? So the mindset here is to take opportunity. You take an opportunity, you enter, you make your money, you make your profit, and you exit, okay? That's how traders work. Now let's look at Bitcoin, okay? So BTC USD, I'm making usage of an index, okay? So from here, wow, you can see a rally happen and a burst, or apparently seems to be a burst, we don't know, okay? So we change here to day, okay, 1 day, so to daily chart. And on daily chart, it looks like, at least for me, it doesn't look like a burst, it looks like a downtrend, okay? That would be my first opinion when I look at this chart, okay? So it looks to me something like this is forming, okay? So we are on a down trade, okay? And I'm going to draw something like this, okay? Yes, I know that some people will say, oh, we broke here. And I know some people will say, oh, we broke here, okay? So this is roughly to have a rough idea of a channel, okay? And this is contracting, and probably this would become something like a triangle or something. I don't know. But if it goes up here, okay, you can still make some money. That's another idea, which would be something like this on the daily chart. If it goes up like this, okay, and doesn't break this channel and it starts to go down again, you can make some money from here, from this fall, okay? And this is what you could make money from. Of course, it's not, again, it's not 100%, but that's how you enter. And eventually, if it breaks this and starts to go, if it starts to form something like this, okay, something like a zigzag up and down, up and down, up and down, then it could go up again. So this is not what we expect. You expect something that will go up here and then go down, or break a bit like it did here and go down again. That's how you see the market, okay? And you can also say that by looking at the RSI, you can also say that from here you expect price to go up again, okay? So some traders could also make usage of the RSI here and could go long. So you could have bought here, expect it would go up, but it wouldn't be for long. So not my way. Why? Because we are on a downtrend. So I wouldn't have bought here expecting it will go up, just because we are on a downtrend. So I follow the overall trend. I like that way. I like to follow the overall trend, so I wouldn't have bought here. But again, it's my ways. Like some traders may think there is a buying opportunity here, and they might have bought here, and they'll probably close somewhere here. Okay, so that's all up to you. But the message today was, okay, how we always, as traders, we always think of making usage of the opportunity, and we spot the opportunity, we make money, and we exit, okay? So is Bitcoin a bubble? I don't know. Nobody knows, and honestly, you don't have to care about it, okay? That's the message for today. Bye.